The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday through Friday, noon till 1 p.m. My pleasure to be here. Hey, Dow's actually down 35 at 21,722. S&P's down 2.5 at 2463. Comp index is up 3 at 63.96. The VIX is up about 30 cents at 11.93. What I said to my subscribers this morning in my opening call, my daily newsletter right here, my five quadrants that I have over here. This is the Dow 120-minute chart, made a peak F, pulling back sharply. This is the VIX 120-minute chart in an area where it could have a bounce. This is the short-term trading index, Richard Arms index, and this is the daily Dow and the S&P bar charts, and shows you the U cup formation that failed on the right side. So far it's failing. And I discussed, and what I said is today, if at 10 p.m. Eastern Time, the Dow SPX and the comp index are higher, holding into 10 past 11 Eastern Time, that will imply a decent up close is likely. More probable is a mixed to slightly weak close today with a slight rally in the VIX index. So this is what I do every single day, show my subscribers this is the overview and market today. Then I have the, let me get to it right over. Then this is the daily chart. I actually showed two of the Dow daily. Why? Because one has no MACD and stochastic, another one does. This one has some other techniques as well as a Chapman Wave 5 formation plus the notations. And this one here has the MACD and stochastic included so that we can look at all the different parameters, and this is what I discussed. And then there's also the 120-minute chart where I go into in greater detail, if I can find the thing. Look for two charts. Oops, I can't find it. All right, well, there's a 120-minute chart, and that 120-minute chart I discussed. Let me show you something very interesting here. Right in this particular slide, I have the 120-minute Dow and the 120-minute Dow on the right with the MACD and stochastic. And what I said is that sharp pullback is creating an arch formation, number one. Number two is this is the first period we've seen in a little while where the 9-period moving average has acted as extremely strong resistance. It did that again today. That's the black line. In this case, it's the maroon line. But in this chart, I also include the 20-period exponential moving average. So what's happened is that we've got the pattern that I call the lowercase h. Looks like this. You go down. You can go straight down, but you're going down in a series of lower lows and almost in a straight line. And then you make an arch formation. And that arch formation looks like a lowercase h. And we called it years ago in my CD introducing the Chapman Wave methodology, I called it the dreaded H, because at that time a lot of people were looking at gold stocks, and we kept seeing from that January, I'm trying to think, 2004, 3, 4, where I had a major sell signal in ASA, South African South African gold company, conglomerate actually. And then what happened was that was a monthly chart, and we kept seeing these lower H's take out the left side low of importance and come down sharply. And that's why I called it the dreaded H, because if you were long, that was wrong. And now what's going on is we've got this dashed pink, thick 120-minute chart, rising trend line, and that just says very simply that a close underneath 21.7. It should be 729. I'm just going to be safe here. I'm going to say a close below 21,730 suggests that the 21,709 level will be taken out. And if that's taken out, we start leg 3 in the down wave in the Chapman Wave 5. And if that becomes an A to B failure, a B minus failure. All right, enough with that. Let's just go over the numbers. S&P So the Dow, essentially, we are still short the Dow, have a small position short. Mostly what we're looking at is in the Dow, a move above 21,850 would be very positive. And a close, not just a move down, but a close below 21,720, 21,700 in the next day or two would be quite negative. S&P, same thing. A close above 2482 would be very good. That's 20 points from where it is, 2463 down 2. And a close anywhere in the 2455 area suggests that finally that H pattern in the daily chart is kicking in, and that we should be pulling back, and it needs, in the weekly chart, under 2450 is really needed to get some kind of a sell, an inkling that you're going to go back to a sell mode in the S&P weekly chart. A good comment was made. Kevin had said, it really basically saying, if we're looking at charts, it's really that weekly chart that is so important. I've been talking about that for a long time. Yes, the weekly chart, and it's my error. Once the Dow broke above this weekly chart on a closing basis back in August, the week 120-minute chart, sorry, that was a mistake. Let me just move out of here. Once the weekly chart had broken above, this is what I thought I was looking at, the weekly chart of May the 26th, it was really incumbent upon me to say, hey, this weekly chart is looking good. Let's just go long. It will stay long until there is a decisive close below. I mean, mea culpa. It was my fault, because even though the MACD and stochastic have been acting extremely weak, the price has been going higher, and price is the arbiter of the trend. And that's going to happen right here, because I do believe that we're going to have a pullback and another close below the 9-period moving average in the daily of 21,836, and that this weekly 21,740s is going to be sacrosanct, because a close now, if we have a close below it, there's a really good chance there'll be a very quick dip to test the 21,600 low that was made the week of the 25th of August. Let's go to the QQQ. QQQ is now up 35 cents. Not bad action, but not great action. But the weekly chart is really holding very well. I should put it this way. The weekly chart is the most important at this particular point. The technicals are kind of weak. The price doesn't know that, and that's all that counts. Price is the arbiter of the trend, and the Qs are still holding very well. A break into the 146s would be very positive if it happens in the next 3 to 5 sessions, and a close below 143.50 would start to get back to this negative action again. All right, let's go to the gold. Gold is up. Dollar is down. I'm totally wrong with that. Gold is acting very well. It's up 12 at 1351. This is a quick leg E. I'm calling it an E right now. The daily MACD is strong. Stochastic is 90%, very strong. Unbalanced volume is getting a little bit overbought, but I thought that gold was making some kind of a top to go sideways to down. No way. It's making a new high, and that's just telling us something about what's going on, especially if you put it together with the XLF, which is the financials plunging. Plunging. It's down 44 cents at 23.86. What I meant to say is that the weekly looks very much like a plunge, in that we've had huge red candles to the downside. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 32. S&P's down 171.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we're looking at that XLF, which is S&P Selects Financial Spider. Peak E, I'm looking at in the monthly chart, pulling back quite sharply. So this is going to be very important because this with the regionals, which is the KRE, S&P Regional Bank ETF, not good action, taking out all the lows of the spring and the summer. I don't like what I'm seeing there. So a question I got was Goldman Sachs looking lousy, Bank of America looking lousy, just about at 22.85 to hit the 22.58 200 period moving average in the daily chart. And the weekly chart, I've still got it as a monthly chart, I've still got it as a peak E, as a peak C. It was a peak E in the monthly back on the 3rd. That was that March spike on March the 1st. To 25.80, and that was an E, and then it came down. So I'm watching these very closely. So that's there for the bank index, etc. Question about the EUR. Let me show you the EUR USD. Look at this. This is climbing nicely, about to retest for a little bit of maybe a double top short term, but we won't know until this is completed. Extending in the daily, it has to go above at 1.2010. It needs to go to 1.2069, and that'll 1.2070, which will start the next leg up, and that'll be a confirmation. I would have to put that as probably E/C, and I'm thinking more like a C because that dollar really took. I thought we had a UUP. We took a tiny 1%, I think 1.1% loss on the. It didn't work out. If you keep your stops really tight. When things work, it works very well, and if they don't work, you're out for 1.5%, 1.2% loss, and that's what we did here. The next question was, Bob wants to know, short Indu? You just said the other day you were long. No. What I said was, we had a number of long stocks. In fact, we're mostly long. And that we got stopped out of our short position in the, wait a minute, yes, and that we were mostly long. If we had a short position, got stopped out once again for a very tiny loss, and we're back in the short position. But at the same time, are you getting whipsawed? No, actually, on a very short-term basis, taking a few 1%ers, but we've got some nice stocks. I mean, we've got, we've got an auto company that's had a really nice gain. against this whole backdrop, having a sharp pullback today. But that's gone from the 34s to the 37s. We've got a commodity index that's had a really good gain. We have a stock that we used as our experimental stock to get into, but that I was going to follow with the Chapman Wave very intently from the webinar. It was the day after the webinar. The first one was on August the 2nd. August the 3rd, we got into this. It's still holding very nicely. It's done everything that we needed. Yeah, and then we just bought something today, and it's down a few cents. But the idea was to buy two positions, one at the open, one at the closing price of yesterday. It actually gapped up and then came down, and one lower down. We haven't got the lower down. So I wanted to be in it because I think it's in an area that could be, it's under the radar. It is not in the line of sight at this particular point. So, yeah, so that, I hope I answered that. Next question was, I didn't do euro, so I did the EUR. Now look at the USD JPY. This is going to be very interesting. Look, that's coming down with the dollar. It looks like the dollar. In fact, it's gone under the 200-period exponential moving average in the weekly chart, and it's made this double arch formation. It's really like one big H pattern right there. And that's just the rule of thumb is if it takes out the low of the previous left side, if it takes it out and closes under it, it has one implication. If it takes it out and bounces, that's another. And we've got, as a reminder in the den, yes, it's got one more day to go. It's not a weekly close yet until tomorrow, Friday at 4 o'clock. So at this particular point, at 108.35, down 0.87, the low that we're looking at is 1.08.122. So it's taken that. Well, it's taken that out. We'll see where it closes. And the monthly chart really doesn't look very good, making lower lows and lower highs on the shorter term, even though it's a monthly chart. Okay. Next thing I was asked about. Oh, GE. Oh, GE. Look at this GE chart, 24.26. It had that one aberrational day, big session. Was it Friday, Monday, Tuesday, Wednesday, Monday? And all of a sudden it gives it all back. And it's trading at 24.20. Oh, GE, what a tragedy. I mean, I spoke about it. I said GE's probably lost its focus. Now they're focusing on their headquarters here in Boston. And, of course, they've chosen an area. They make really good choices because they chose the area down on the wharf where there is noted flooding. So at any point, at any stage, over a period of a 3-year period, if there's just a horrible storm, you might see people not be able to get in there. That's from what I hear. I don't know, but this is what I'm reading about. So we'll see. Did they do the right thing? I think in the end, probably it's the right thing, but I think it's been part of their distraction. So GE is looking lousy, horrible, in fact. So as an indicator, it probably is telling me a lot more about the market than we would like to know at this particular point. Or maybe you do want to know. However, I want to go to WLL. WLL is Whiting Petroleum. See, this is what I'm afraid of in the petroleum area, in the certain sectors of the petroleum area. Because I still believe that there's a glut. And actually, you can tell that there's a glut because right now, crude oil should not be at 49.15, unchanged 49.16 on the continuous contract. It should be at 58 to 61 if there was just an enormous crisis going on. And this is really saying, you know what, there's a glut, and even with what's going on in Houston and the whole Gulf Coast area, we'll be okay. This is just a temporary thing. This is what it's saying right now. Maybe in 3 days' time, they find out that it's much worse. But I'm looking at this and I'm saying, wow, if ever there was an opportunity for crude oil, it does that. Any excuse used to be to scream to the upside. So let's see what happens. Now, a couple of questions I had about, so WLL, it's giving back those big gains. It had a gain. It was just under 420. It screams up to the 473 area. On the 6th of June. That was yesterday. Today's the 7th. And where is it? Goes right back to that 420. It's just about to test the low, 418, the low of the 23rd. I don't like that. These weekly charts are horrendous. Now, we looked at OIH yesterday. Look, OIH is holding much better. This is because it is in the market vectors oil services. It's kind of the conglomeration of them all. So as a pattern, I'm just saying as a pattern, this is the pattern that should technically power to the upside and take out one of the left side previous peaks of importance. In this case, it would be the peak of 2638, it's trading at 2341 right now, the market vectors oil services ETF, and it should take out the 2638 high of the week of the 21st of July decisively. And then you've got yourself something that says, you know what? We've got weeks of going up. Maybe not months, but weeks. We haven't got that yet. So just be careful. Another question I had, well, we've got a break coming up. Let me just do this during the break. Let me see. I haven't actually updated it since we were on the air. Yeah, this is the Dow 10-minute chart made a PG in that last move back at 10 o'clock. Pulls back sharply, very sharply, 24.60. Now it's bounced to 24.67. Trading right now at 24.62. The arch formation. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let's just do this. I can't even remember where I was because there were so many things I did. We did the OH. I had a question about the FXE. Warren wants to know which leg is the FXE in daily. Is it a weekly, monthly shift? So the daily, there's an instant restart right here. And normally what I would do is give the benefit of the doubt to the instant restart, but respect that the G, because the MACD did exactly what you want to see for a peak G, that it did fall with a peak G. But I would also, just for a little while longer, in the Chapman Wave methodology, I would keep this and I'd put in a G/C. Why? because so many of these G's, if they only pull back a small distance and make a cup formation, they go on to make D's. So I'm going to do this. I'm going to call it right now. And the real question is, where are we? And I'm going to suggest that the FXE, which is the currency share Euro Trust ETF, probably an ETN, sorry, an ETN, it's probably a note, is in probably a B, and it's about to make a C above 116.28. It's at 116.01. That would correspond to the fact that we are looking. It doesn't. I would actually like to see it next week, not tomorrow. But if it's going to happen, it's probably going to happen tomorrow. And one of the reasons is that the weekly chart has gone above the 200-period moving average. The 9-period moving average is about to cross, which says that it is really positive short term, but then expect within about 3 bars or something like that. There'll be 3 weeks. Within 3 weeks, you should get a sharp pullback to test the 200-period moving average. That would be at 113.70s, somewhere around there. So I'm looking at it. Everything about it is positive. It is a huge leg A to the upside in the there it is, in the monthly chart. And the support is very strong. It's good between 115 and 114.60, but it is really strong going to the 114 to 114.10 to 113.70 area. If it takes out 113 anytime in the next 2 weeks, that says, oops, we've got at least a short-term to an intermediate-term sell signal. So that's the way I'm looking at it there. So I hope that answers the question on the daily. I've got D/B. D/B. And so far everything about the price is positive. Stochastic is only at 63%. So this is really price moving without the confirmation of the stochastic in the daily, but it's the weekly chart that has been holding us so well because the larger tide is good. So we're also looking at the next question I had was TRV. Oh, great. Sarah sent a whole bunch of insurance stocks. Let's look at them. TRV's Travelers trading at peak D in the daily. It made a top. Oh, it knew the storm was coming back on the 11th, 3 days after the Dow made its top. At 130.36 on the 11th, TRV Travelers, the Travelers Company's insurance, is down, now it's down 336 at 114.37. It's in a swoop to the downside. The weekly chart is just horrendous. The peak E, this is a hat trick top. And the monthly chart is in leg D. I know. I'm going to suggest that this has all the implications of a hat trick top, but we're only in the very first month of the major move to confirm even a D in the monthly. But everything about the daily weekly suggests that this is serious stuff for the insurance, very serious stuff, because that means our insurance costs are going to go up. Next one is TRV-RE. That's reinsurance. What's it called? Everest Re group. Yeah, same sort of thing. Look at that pullback. I used to have the notation here. I'm not going to do it right now. I'll try to remember. In fact, I'll make a note to do it in the next couple of days. By the weekend, I'll have the insurance stocks. We want to see when they bottom because that's going to be important. PGR right here is Progressive. Good ads. They've kept the ads in a very good way with that strange lady, and it doesn't help. Look, that's insurance. You're going from the 49. Was that a round number high? 49.01 on the 23rd of August. We're trading at 44 right now, down 5. It's 11% down. No, this looks very poor. Yes, thank you for those. We're looking at XL is the next one. XL. It sounds like some kind of a video box. XL Group made an ABC. Yeah, this is one of those. Oh, it made the D. No, it didn't. Yes, it did. No, it didn't. 41.37. No, 41.39. I'm going to call that a red, a phantom peak right now. And I'm going to say by 2 cents, I think I can do that. And you've got a peak D in the monthly. There it is. So, yep, another one. XL trading at 36.34, down 2.11. Problems in the insurance industry. Okay, so now I had a question about, let me just run this through here. TOV, real of the day. Yep. So SU, which is Suncor Energy trading up, acting very nicely, 32.77 up 23 cents. Looks to me like you've got your cup formation. It's going to break 1 penny above the high of the 7th of August, 33.24. It's going to go to 33.25, and that'll be leg B in the weekly chart, and then it's going to take a bit of a rest. The peak C in the monthly only goes at 33.80. So it'll do the one thing probably first, and then we'll see if it can do the second one. Acting very well. If you are long, stay long. This is very good. I would then get a little, I wouldn't say nervous, but I'd get a little cautious as it gets to the 33, what did I say it was? 33 area, because 33.25 does break out, but that's where I would probably say take a little bit off if you are in that heavily. Take a little bit off. You'll be able to put it back again a little lower, but it's looking fabulous. That's just money management more than anything else. Okay, next question was BRKB. Well, we know that BRK.B is Berkshire Hathaway, BRK.B. And Berkshire Hathaway, of course, being, there. So Warren Buffett's prized possession made a peak F top. I was talking about this the other day. I believe that that was a peak D. Then it goes to what we call an extension in the double arch formation, the M-shaped pattern in the stochastic. It's the double camel hump, technical term. Anyone who's taken my courses knows that that's what I use. And at this particular point, we've got that inverted V, which gives you that second confirmation of a double top right there, and it pulls back very sharply. Peak D in the weekly chart, and leg E, probably a peak E coming very soon in the weekly, but in the monthly, but it's holding better than all the others, even though it's down 3.49 right now. But I think it will suffer like the others. So this is a very serious thing for me to see Berkshire Hathaway finally getting smacked on the nose. Doesn't happen often. Apple, in the Dennis mentioned it's red. Oh, a red apple. Well, personally, I like those little freckled green apples, but I'm not a big apple fan. I used to love the little freckled greens. I don't do that anymore. And this is a red apple. So Apple trading at 161.21 made a peak D high at 164.94 on the first. 164.94 on 9/1/17, and this is just the start of a move down. I have to do some work to say, is this a serious sell signal that could go to a sell mode? And what about the weekly chart? I'll be back. We'll talk about Apple. I think it's worth it. It's one of the key stocks on the NDX 100. Basil Chapman, Tiger did this hour. Dow's down 56, S&P's down 4.5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yeah, so let me go back. I wanted to show the chart of, was on it just a moment ago, Apple. So Apple, there's nothing yet wrong with the price movement, and the MACD in the weekly chart is good, not great, it's good. But the stochastic is actually increasing, it's at 85%. The monthly chart has just started its breakout, and that says to me this really is a peak, a leg C, and at some point we'll get the peak C, but it's still going to go to higher highs. On the shorter term, there's no validation for the MACD with the price that it was at when it went to the high of 162.51 on the 16th of August. Then it pulls back under the 9-period moving average. Then it goes back over the 9-period over, spikes higher, has very small candles going to the high of 164.94, the all-time high in the first. And the MACD was not very good, and now MACD is failing. However, the stochastic ran very sharply. That did confirm the peak D, but now it's gone in within 5 or 6 sessions. This is a rule of thumb that I have. If there's a spiral to the upside after this double camel hump type formation, and it quickly goes back under 80%, you've got to be careful. So here I am. I'm saying short term, I'm looking at Apple trading at 160.90, down 97 cents, as starting to show vulnerability in the price, the technicals, but not in the distance that has traveled, 3 points, 3.5 points, even if it's 4 points from the high that it made all-time high just 4 days ago, point a day, what's the big deal? What will happen is that if any point in the next week and a half, Apple takes out and goes below this candle of the doji candle of the 25th of August, below 159.27, let's call it 159, it's only 2 points low, 2 and a little bit points lower. If it does that, there's just a wealth of evidence that says that is a peak D daily top that's gone from a sell signal to a sell mode. Still nothing in the weekly chart, because the weekly chart has to go under 156, close under 156. That's 5 points lower before I start to get any signals, verification in my Chapman Wave methodology of some kind of a pullback of time, and then maybe price. So Apple's still acting very well. If you're a long-term holder of Apple, just at this point, I'm saying to you, money management, I like to say, if you're going to new highs and you haven't taken anything off, sure, you've got to take a little bit off. That's just the way it is. But generally, I see a tremendous amount of support in the body of this Chapman Wave stalk leg formation. This is the head, this is the neck, this is the beak that's being formed right now, and it's gone into the body. So that says, be careful, because the middle of the body, everything confirms that we're looking at a pullback of 2 points, 2.25 points, we'll start to get some serious acceleration to the downside. But that's just the daily, and the weekly chart really has quite a way to go. So yeah, monthly chart is still looking good. Now, Guild, which is Gilead, we have a dinner who want to know, S&P want to know what about it. I said it looks absolutely fantastic. It looks like, what did I say? It's acting like the star of the show. It's really in the IBB, it's helping the IBB index or the BBHs, and it's acting very, very well. Biotech, Gilead, Gilead Sciences trading at 85.32, up 2.37. That's fantastic. Up 2.87%. Nice action in leg D in the daily, but everything technically is very good. It gives 81. You're a long-term holder, so I'm not going to even talk about it other than to say leg C in the weekly is still very positive, and only a leg A in a rebound, first move up in the monthly. And that's saying to me there could be an A failure, but at this point I wouldn't do anything. And I'm just going to say, if you're a long-term holder, I don't even want to say take off a little bit now because you've managed your trade beautifully. What I am going to say is that if you're a long-term holder, but you're getting a little kind of nervous because this thing's shot up from 70 to 85, $13, that's, that's, what was that, 18% or more in a very short period of time, in less than a month. If you're saying, I think I need to take a little bit off, but designate it to put it back between 76.50 and 74.30, which might not be the low if there's a big pullback in the market, but you know what? 12 points you got for nothing. It means that you're taking that off and it's in your pocket. So there you are. Now, what we're looking at here is the question about, dollars into, Bob says, dollars into retail, cab, RH. Look at RH. I noticed that this morning, RH, I was at the health center and I saw on the ticker, RH going by up huge. Up 21. It's at 70.82. This is Restoration Hardware. Now, it does that. It has these huge spikes to the upside, but it also has a way. Oh, look at this. This is so interesting. RH is Restoration Hardware. They changed their name. They changed their symbol. They used to be something else. But they've always been called Restoration Hardware, so they changed the actual symbol. But look what happened. It went to 106.49. I call that an R. I don't know why. That was a mistake. It should be a G. Edit. It was a G. It was a really unusual monthly G. Very quick. C to D to E to F and then a G. And it went all the way from the 90-something to the 106 area in price, in a very short space of price. But it did take a year to do that, almost a year. But what was important is that it plunged all the way down to the 20, let's call it the 23 area, held the 200-period exponential, 200-period simple moving average, and then had this, it must have had a news today, because look at that, that is huge spike. And it's in play. I think it goes to a D in the monthly chart, but I do want to look at this this high of February the week of the 24th of 2017 at 33 round number high, and the very next week is 32.95. I knew I had to look at that. I just knew from having done this for so many years that there was a chance that that was a peak. Your eye just gets used to these things. Yep. So this is C. And this is a D. So it made a peak D in the weekly. I couldn't understand it. Chart looked like it really had everything going for it to have made a top. That was a peak C2. There's a good example of a C2. Oh, I said, I have been looking, but I forgot to make a note of it. I will, maybe, I'm not sure when I can do it. Next week, I'll take a little time during one or two of the sessions, and we'll talk about that, what happens at a peak D. Because look, here's your peak D. Pulls back very, very sharply, and look at this quick rebound. And what happens in this peak D? How do I know that it's going to E, F, and a G? And that's part of this whole thing with the MACD. So I'll have to talk about it. Maybe someone will remind me next week, maybe Tuesday. We'll take a little time. So I am going to, we're going to go to a break. I am going to give for my subscribers, I said a very rare and unusual update. I said I don't even know what I'm going to do. I just felt today I need to give an update at 1:15. And here's, I think one of the reasons is this. We went along the IBB yesterday. No, we didn't. We went along the BIB, which is 2 times long. So we went 2 times long, but in a small position. And what happened? No, in a half position. It's a fairly reasonable position. But I had a really tight stop. It looked like that was a peak B and that we were going to pull back rather than F. We did pull back. We got stopped out, and then it closed nicely. Today it pulled back, and now it's acting very nicely at 335.73. I want to talk about the IBB. I want to talk about the SMHs. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, a couple of things. First of all, I think there was some mention about Steve. I hope Steve's okay in the eye of the storm. That's number one. Number two is I hope everyone down in South Florida. I mean, wow. I haven't actually been able to keep up with it because I've got some other things going on, but it doesn't sound good. So we're just really hoping things just, the wind blows another direction or whatever it is. I mean, or if there's a problem, that you stay safe. And the other thing I want to mention is that I do have an issue tomorrow at noon. I'm going to tape the program. I haven't confirmed it yet. I'm hoping to tape it early in the morning, 8 o'clock probably. I'll do it live, and then we'll just replay it at 1, at 12, if that works out with my engineer and everyone. So if I'm not able to do the show for whatever reason, I'm looking out, and at 1:15 I've got an update from my subscribers to my opening call. At looking at the market, a close below 21,700 in the next day or two would actually be pretty weak action. A close above, I don't care what the reason is, a close above 21,850s on a very short-term basis says, hey, that's good. save the day. But here's what I wanted to say. The VIX index, someone mentioned that VIX is not really in play, but you know what? It is in play. It was at 8.84 just over a month ago. And now it's at 11.92. Yes, granted, it went to 17.28, but it's at 11, call it 12. And that's a huge percentage. I mean, we're talking 38, 42%, depends where you take it from. That is a big move, okay? So the VIX is kind of in play, but people are very nervous. And here's the reason why. For instance, remember I said that I liked the IBB. We didn't get back into that. I really wanted to, but I thought, you know, I got to respect the fact that we were taking out 1.1% loss or whatever it is. It wasn't the IBB, it was the BIB. But the point is that I like what I'm seeing. And you just saw Gilead, just a spiral to the upside. And I'm thinking that the rotational aspect of this market is still in force. In fact, I wish I had time. I don't have time. I want to talk about it in relation to the presidency and the market right now. Just it keeps getting clearer and clearer for me. I'll try to talk about it tomorrow if I'm doing everything. But this IBB is holding well. The same with the SMHs. It should be breaking down. Instead, the SMHs are holding well. And that's the diversion that we're getting between different sectors, even different stocks within the sectors. Folks, have a great day. I'll be back later with Tom O'Brien. Have a great day.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.